Something huge is happening right now in the world of money. It's not just one story, it's a massive collision of powerful forces, and it's reshaping, well, pretty much everything we thought we knew about finance.
So on one side, you've got the old guard, the titans of Wall Street. And in 2025, they are having an absolute party. The market is just shattering record after record. And honestly, it feels like the music's never going to stop.
But then you look at the other side of the tracks, at the world of digital assets, the supposed future of finance, and it is a total bloodbath. It's in absolute chaos, reeling from one of the most brutal crashes it has ever seen.
So what's the deal here? Are we just watching two completely separate dramas unfold, or are we actually witnessing two sides of a single massive collision for the future of money itself? Let's get into it.
Okay, Act 1. Let's start with traditional finance. Because right now, Wall Street isn't just winning, they are throwing a full-blown rager, and the guest of honor, the star of the show, is artificial intelligence.
And you can really feel the optimism in the air. Tech analyst Dan Ives, he just nails the sentiment. He says, we are in the second inning of a game going into extra innings. The thinking is, this isn't some temporary bubble. No, this is the dawn of a whole new era.
So what's actually pouring gas on this fire? Well, it's not just one thing. It's a perfect storm. You've got this belief that AI is literally a fourth industrial revolution, and corporations are backing that up by spending trillions. On top of that, everyone's expecting the Fed to start cutting interest rates, and all this institutional money that was on the sidelines is now desperately scrambling to get in on the action. And get this, there is a mountain of cash just waiting to be deployed. We're talking $7 trillion sitting in money market funds. Now, as the interest rates on that safe money start to drop, a huge chunk of that capital could come flooding into the stock market, sending it even higher. All right, so that's Wall Street. Now let's jump to the other side of this battlefield, the challenger. Crypto. Well, it's not some unified army. It's more like a movement that's being forced to fight a war on two separate fronts, one outside its walls and another one that's raging from within.
So the external war is against the establishment. And you can see it playing out perfectly right here. On one hand, you have JP Morgan just flexing its muscle, building a $3 billion skyscraper in New York City, basically a giant monument built with profits from the old way of banking. At the very same time, that same establishment has its lobbyists working in the shadows to kill innovations like crypto yields. And why? Well, because crypto yields can offer way better returns than your bank savings account, and that could pull billions out of their system and into this new decentralized world.
Now, if you listen to them talk in public, you get a totally different story. Here's Jamie Dimon, the CEO of JP Morgan, basically saying his hands are tied, that he can't get involved in politics, and even wondering aloud if that violates his free speech rights. It's a very carefully crafted image, right, of an institution that's above all that messy political stuff.
Yeah, but let's look at what's actually happening behind the curtain. Jamie Dimon, he's a key player at the Bank Policy Institute, which is a huge lobbying group. The American Bankers Association, they're leading the charge against crypto yields. And guess who has an executive sitting right on their board? Yep, JP Morgan. So they aren't just involved, they are running the whole play. But while crypto is busy battling the banks on the outside, it is also imploding from the inside. It's facing this just devastating internal crisis, a total and complete collapse of market confidence. And the scale of this collapse is it's jaw-dropping. $20 billion. That was the size of the liquidation event. This wasn't just a bad day. This was the single largest forced-selling event the crypto market has ever witnessed, and it completely wiped out legions of traders.
So you have to ask, how did this happen? How was the market so fragile? Well, according to the analyst blockchain backer, traders got so desperate for the good times to keep rolling that they would hyper-focus on what they can grab hope onto. They were basically ignoring a whole cascade of flashing red lights that a disaster was right around the corner. And that's what left the challengers so wounded and so divided. Okay, so let's recap. You've got Wall Street on a sugar high and crypto on life support. Seems like an open and shut case, right? The old guard wins. Well, not so fast, because a third player just walked onto the field and decided to flip the entire board upside down, the United States government.
And this whole part of the story kicks off with a really vicious, truly awful type of crime known as a pig butchering scam. It's as horrible as it sounds. It's this long, cruel manipulation where scammers build fake friendships or even romantic relationships. They fatten the pig by gaining trust, convince their victims to pour their life savings into a fake crypto site, and then they just vanish. The slaughter.
Now, the government seizing Bitcoin from criminals, that's not new. They've been doing it for years. But on March 6, 2025, everything changed. A quiet executive order comes out creating something called the Strategic Bitcoin Reserve. The new policy? No more selling seized Bitcoin. And then boom, in October, they seize a massive hoard of 127,000 Bitcoin from one of these pig butchering rings.
And just like that, almost overnight, the US government becomes one of the biggest Bitcoin whales on the planet. They now control over 325,000 Bitcoin. To put that in perspective, that's more than 1.5% of every single Bitcoin that will ever exist. Think about that.
So this is a massive deal, and it creates two completely opposite potential futures for Bitcoin. The bull case? Well, the optimists say this is the ultimate stamp of approval. The US government is treating Bitcoin like digital gold, creating a huge supply shock by taking coins off the market, and probably kicking off a global arms race for other countries to build their own reserves. But then, there's the bear case, and it's pretty scary. This move represents a terrifying centralization of a decentralized asset. It's a political weapon that a hostile administration could use to just dump on the market and cause a crash. It's a huge control risk. So for anyone in crypto, this is the question. Does this make your investment safer, or does it put it at the mercy of a politician's mood?
So, what started as a simple David versus Goliath story, crypto versus Wall Street, has now become way, way more complicated. It's not a duel anymore. It's a three-way standoff, a new financial trilemma.
I mean, just look at the players on the board now. You've got Wall Street, still riding that incredible wave of AI money and holding all the political cards. In the other corner, you have crypto, shaken, volatile, but still representing this huge paradigm shift in what money can be. And then you have the new wild card, the state, an unpredictable force that now holds the power to either make the whole space legitimate or hold it hostage.
Which brings us to the one question that really matters now. In this new three-way battle for the future of money, who's going to win? The established CEO, the disruptive coder, or the powerful state? That is the story we are all about to find out.